The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Would like to mention, if you have any calls, it's 877-927-6648. You'll have to wait about 15 or 20 minutes because they've just informed me that the board is lit up. Folks, I posted a chart here of Credit Suisse. And if you look at it, you'll see that it goes back 2 years. And you see the market has been in what they call a profound downtrend. And today, the news came out as a big surprise that they were having some trouble. And that means they are history. They'll be bought out by one of the major banks of Switzerland, probably UBS. They're all about, it's down 25% today, but you know, when you're trading at 2 or 3 and you go in half, it doesn't take too long to do that. I'm very sorry. Let's see if I can get this chart up. And I can't, so I'll put it up here one more time. Sorry, boys and girls. Had a lot of data problems last night, but that's not your issue. It's mine. And, oh, this is not good. This is not good. Oh, now it's better. Hold on just a minute. Okay, there's this chart of Credit Suisse. You'll notice here as we start down here, the 200-day moving average and the 50-day moving average and the 100-day moving average must have turned down somewhere along this line here. I don't know, maybe down in here. You know, that's a really good way of looking at the market. You watch Basil and Steve Rhodes and Tom O'Brien using that average, at least it tells you that there's something wrong. You know how many 382 patterns I counted on that? Johnny's raising his hand, and he's got both hands up, and it says 7. And Johnny, you win a prize. You're doing really good over there. Now sit down and get your homework done. You're still doing good in math, but you really suck in English, so keep studying. All right, now let's take a look at Credit Suisse. Now, we already know the banking sector's in trouble. I mean, even people in Tucson at the market know that the banking system is in trouble. The question is, how much trouble is it? Well, considering that the S&P is holding up relatively well, I think that we should take a quick look at that just to see what's been happening to it, you know, over the past few days so we can see where things really are. And I just did this chart, and it better come up correctly. Well, what we'll do it, we will do it in the eyes of the Russell, because that's the one I can see absolutely for sure here. So here's the Russell yesterday, okay? And you can see the last from the 10th to where we are right now. Now, we have not broken down below those lows yet in the S&P. I think we are going to shortly, and I will make a small minor prediction here. Sometime between now and the 21st of May, which is coming up, March, which is coming up in about 5 days, we're going to see a move in the S&P of more than 300 points to the downside. That'll be equate to about 1,500 to 2,000 points in the Dow in one day. That's my prediction. Now, remember, you pay for my prediction, so if you lose, you get the second prediction free. Anyway, that's what we're paying attention to today. We have the S&P is holding up incredibly well, thanks to the auspices of the Federal Reserve. But all we did yesterday, and I can't understand, I just did this chart 5 minutes ago, and you're telling me that I can't find it now? Well, that's what they're telling me, and by golly, you know what? I can't find it. So I'm just going to have to make it up next time during we do the next break, and then we'll go from there. All right, let's go to where the real money is, and that's the bond market. And if you'll remember here, folks, we said to follow the bonds. And that's where you want to be following, because when these bonds finally turn, and I think they're going to get to 139, we hit 133 today. Remember, up 7 points on the week. So one more week like this, and we'll be at the big ABCD pattern in the bonds. So we got a major low coming in here, I think around the 21st of March. That's my guess. And I think it's going to be one of the best buying opportunities that we've had in a very, very long time. You know, that's my 2 cents worth. So there goes your guarantee right out the window. Let's move on here to the next one here. I want to show you the part of the bonds. We started this move. We're trading up about 5 points from where we are, 4 points from where we are right now. Hold on just a minute here, and we'll. I can't see what's going on here. Oh, shut the front door and raise the rent. I got to show you one here, boys and girls. I get to. I got to show you this. Just a few minutes ago, somebody asked me why silver was acting so badly, and I said, well, let's take a look at it. And here's what I was looking at just a few minutes ago. You can see the time on the bottom right here that there was a 382 right there. This was when gold was making a new high at 1942. There's where we are right now, and we were making a 382 in the silver. So that's the kind of thing that I'm looking at as a day trader, nickel dimer from Terre Haute, Indiana. Anyway, let's move on and take a look at a couple things they're really important. And next one is super important because it affects every single one of us, and it's going to affect us on a long-term basis. This, my friends, from our friends over in the new state of New York, they're up on the Upper East Side, Goldman Sachs. Oh, that's down in the South Side there at Wall Street. Look at this here. You see that little red dot right there? That's when Goldman Sachs came out with their special report. They bring it out every time crude oil gets above 120. They say look for $140 crude oil. Well, we hit $67 a barrel today, boys and girls. We were at 72 yesterday at the 382 retracement, which I thought was going to be the best trade of the day. I lose data all night long at the 382, and I bought it covered it on the little bit of a tiny pullback and left $4 on the table, but the rest of the stuff was working okay. We were very bearish the stocks for a long time. We've been bullish bonds here for the last month or two after we made that major bottom. But we're over a really, really interesting time in history, folks. I don't know how it's going to come, but when you see the major banks of the world down 10, 15% like they're doing, the market is trying to tell you something. Follow the money. I know the S&P is holding up, and I'm looking at it too. And that's basically what I'm trying to show you. All it's doing is jumping around. Now, the Dow Jones has given up the ghost. The Russell has given up the ghost. The NASDAQ is hanging on by a thread. And if we get below 39.38, let's try that again, Larry, 38.39, if we get below that, you're going to see a day where the Dow is going to be down well over 1,500 points in one day. Now, why did I pick that? Let me tell you why. The biggest down day we've had since this era of 40,000 in the Dow Jones has been 1,400 points in one day, correct? If you multiply 14 times 1.618, you come out with 2,300. All right? In 1987, our previous down day had been 300 points, or 198 points. And I was on the show with Harch Crawford, who I spoke to yesterday, was on the same show. The Dow had been down 190. I just multiplied it times 1.618, and I said over 300 in one day. That's when it was trading at 2,700. We're going to take a break, and I'll get that S&P chart for you, so just be patient. Keep those cards and letters coming in, boys and girls.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I don't know how a miracle has happened here at TFNN, folks. Someone has got through in the call line, and it's none other than Mr. Z himself. John, how are you doing today?
Larry, good afternoon to you, sir. I'm doing very well. Hopefully you're doing the same, and I can see that your plans on taking a day of R&R today that you mentioned yesterday have been disrupted.
Oh, John, I tell you, I got up at 3 o'clock this morning, all bright-eyed and bushy-tailed. I turned on the computer, and all my data was gone. Took me 3 hours and a half to get it reconstructed, and so it was a little disaster. That's my problem, not yours. What you have to tell me what BRRH3 is, my friend. I don't know what that is.
That is the CME Bitcoin futures contract for March delivery.
All righty. What can I help you with? Since I know very little about it, I can sit here and BS you as long as you like. So tell me what you're asking.
I'll tell you what I'm going to do. I will post a chart of Bitcoin futures. I'll post that in the Tiger's Den. Mm-hmm. If you'll give me 30 seconds while you and I are speaking. Larry, you started off speaking of Credit Suisse. Mm-hmm. And Goldman Sachs and oil futures. Mm-hmm. And the one comment you made was, price charts, they don't lie to you. If you're making higher highs and higher lows, money's coming for it.
Yep.
Lower highs, lower lows, money's leaving. And you don't need to know about the fundamentals to make that observation, and you can use that to protect yourself and hopefully to make a few bucks. I'm calling to just mention and share just the observation on the price of Bitcoin. And I, of course, looked at the cash prices on some of those Bitcoin exchanges. But more importantly, I look at the futures price on that Chicago Merc Bitcoin futures contract. And of course, that's not physically the Bitcoin, it's a reference point, but it is a regulated and listed futures contract. What I observed, Larry, is that after making its bottom both futures price and cash price back in November when that outfit called FTX, when that blew up and failed.
Samuel Bankman-Fried, you betcha.
Yeah, the price of Bitcoin bottomed at that point around 15,000. And I had shared, 2 months ago now, just a weekly chart where I observed at that 15,000 bottom, that was a beautiful AB equals CD within 1%, looking at the weekly chart. And we've been moving higher since. Now, of course, last week, we know that that bank failed. It's called Silvergate Capital. And that was a regulated bank, but it had lots of dealings with cryptocurrency in one way or another. And then over the weekend, that Signature Bank in New York also was closed by the regulators. And, in thinking about those details, if I didn't see price charts, I would have said, well, that means Bitcoin was going to zero because the feds are cracking down on everything cryptocurrency related. Well, the Bitcoin price is in fact made higher highs yesterday from that November bottom. So that's the observation. Price is telling you there's more buyers than sellers. And I know you speak with John Jameson, who understands this distributed ledger blockchain technology topic intimately.
Yeah, he does, yes.
I was hoping you could share with us some of his ideas or speculations. Is this rally phase in the price of Bitcoin something that will extend?
We're gonna know that here in the next couple of days. I've done everything. I've begged and pleaded. And I talked to John Jameson a minimum of 1 hour a day during the week, usually an hour and a half, and on the weekends 4 or 5 hours each day on Saturday and Sunday. And I can't get him to come on the show because he's not a recluse and he's incredibly personable. He's a great presenter. He feels like he just doesn't have the time, or people they don't feel what he has is worth it. But he has been saying about this to me personally, and I've been, look, Jim Bartolone came on a month ago saying, hey, be careful of being short or being long banks up here. He showed a beautiful Gartley pattern at the 382. It's dropped 35% and still dropping from that level. And that's all it is. It's a pattern. But John understands the fundamentals. I mean, he's been, he was a buyer of silver, was down around 19 just a little while ago, and a few other things that he follows. But, he thinks that getting back to the Bitcoin, that if we get it above 28,000, you probably see, I'm not going to tell you what he's looking for because you got to add a digit to it. I mean, he really thinks this blockchain stuff is, for real. And I don't know, John, I've never traded it, know nothing about it. I wouldn't see one if it was in front of me. So I can't tell any more than that. But you show me the chart, I give you a rough idea where I think it's going to go. Watch the 382, John, from 67,000 down to 16,000. Watch the 382 back on that, which would be roughly about 30,000, 20,000. That would take it around 35,000. If we get above 35,000, you'd be looking at a lot higher prices in Bitcoin.
Very good. I appreciate that. I just have to share with this price rally, everything I'd ever hear on the news the past month, 2 months, 3 months would say, cryptocurrencies are dead. The feds are out to get them. There's no reason in the world to be involved on the long side of any of these. But yet that Chicago Merc futures price, it's moving higher, not lower. So I thank you, and I'll just keep my fingers crossed that Mr. Jameson makes a cameo appearance here on your show sometime.
I'll get him to do it eventually, but I always wondered what your secret thing is. So you cross your fingers when you put on a trade. I'm going to have to try that. That's a good one. Hey, listen, brother, you take it easy and stay on the green side of the grass, okay?
Thank you very much. Thanks, Larry. Bye.
You bet. Okay, I think we have, I don't know how it's happened, but we have, oh my gosh, Larry from Wyoming is in. Larry, how are you doing?
Well, how are you, Larry? I'm glad you got rested up. Listen, man, you're a bit older than me, and I can relate to the fatigue, but I'm glad you bounced back.
Yeah.
The only thing I know about, I don't know if Terre Haute is near Ball State, but I remember when I was in high school,
Ball
a lot of the guys
State
wanted to play ball for Ball, or play football at Ball State. That's all I know.
Yeah, that's in north.
Anyways, I'm calling about natural gas. I took a starter position here on a little, 10-minute ABC down back into support area. What do you think?
I'll tell you what I will think. We've got to pay a few bills. When you come back, we're going to look at natural gas. What price did you buy it at, Larry?
I bought Boyle, actually. 4.92.
All right, let me take a look at natural gas. We'll be right back, folks, with Larry from Wyoming, probably Jackson Hole, one of those wonderful ranches up there, probably next to mine.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we've got Larry from Wyoming on the line. And Larry, I posted a chart in here, and I can tell you this, you called on the right day, my friend, because we've just taken out the low of last week by just a hair. So put your stop really, really close now. Whatever the low is, add about 2% to it. So it's got to turn from right here. I mean, it didn't go down and collapse after the new low like crude oil did. So, and it's got a chance. It's at a higher level, but you can't mess around, especially during the time when we got these banks in such big trouble. So make sure you have your stop in there, because it could change. We've been down here, and we've been here for an hour and hasn't collapsed. So that's a good sign. But any lower than where we are right now, head for the hills. I don't want you to sell that beautiful horse ranch you have up there in Jackson Hole. So please do that, okay?
So, okay, I appreciate that. Yeah, you take it real serious when a swing low, potential swing low on a weekly is broken interweek, right? That's what you're saying.
No, it's already broken today. It's already broken today, and if it doesn't go down from here, it's got a real chance. But if it goes just a little bit lower, it has no chance.
Okay. It's not. It's simple, though. Okay. Thank you, Larry.
Hey, that's what Mark Douglas said. Trading is simple, but it ain't easy. Thanks for calling in.
Bye-bye.
Wow. You bet. Bye-bye. I am going right after this show. I am going over to Safeway and buy a lotto ticket because two guest speaker or call-in guests in one day. I only get 2 a week or 1 a month, and by golly, who knows what's going to happen. So we'll see what's going on here with some of these markets. Now, I believe that I have the stock index chart that I wanted to talk to you folks about, and I will get it up here right now because something very important has happened today, folks. The Russell has gotten creamed, the Dow Jones has gotten creamed, but look at the S&P 500. It is held to the exact tick of the 78% level. Remember this one. Remember that, boys and girls? That was the big ABCD there at 39. Try it again, Larry. 38, 39. 38, 39. We went all the way up here, and that's what we hit last night. We had this high here. Remember yesterday's rally? You see that beautiful 3 drive to a bottom pattern right there with an hour before the close? We hit the exact 786 of that number, and look at that, 50% of that number. When these algorithmic guys that are sitting by their computers watching their stuff go like this, when those prices are hit like that, folks, it lights up the tote board. And if those things hold, they're in there buying. And as you can see, the last part of the day being thin as it is, the Dow Jones rallied 400 points, and it went right up to the exact 786. However, the Russell, if you were following the Russell, which we do because, that's a small cap, the one that Jim Bartolioni watches all the time. And if you look at the Russell here, oh boy, we just had a nice one here. Hold on just a second here, boys and girls. I got to do a couple of quick things here and get this up so we can take a quick look at it. God, I love this stuff. I'm so lucky. I get to do what I love to do, and I get to play in the Masters every single day. Here's the Russell. You see how we took that low out of the giant ABC to the downside? We took that low out. Last night we rallied up to just to the 61% retracement, and now we're below those lows. And that's not a good sign. But the S&P is actually holding up relatively well. And given the fact that all the banks are down 10%, hello, operator. I mean, they're doing pretty good. That's what it looks like to me. I don't know. That's my 2 cents worth, and I'm sticking to it. Okay, now let's move on here to the next one we want to look at here, and that is where is the one I wanted to show you? Shut the front door and raise the rent. This is where the game is being played, folks. It's in the bond. Oh, let me show you. We got to do gold here for a second. This is the price of gold, folks, based in British pounds. Now, this in British pound lingo related to the dollar is $2,100 is where gold would be ordinarily. If, in other words, the pound, because it's weaker, you have to buy more. That makes the price of gold go up. So if this were the dollar and the dollar were weak, which it isn't, this would be 2,100. So people in the UK, when they pay for it in pounds, they have to pay more for their gold. So that's the relationship that you're watching as you watch some of these things unfold here. So I hope that gives you some idea of some of the things I'm looking at. Now, I had John Jameson, just when John hung up, he wanted to tell me something. When I've got a break coming up here, I'm going to do my best to get him. I know he's not going to do it, so doing my best isn't going to do it, but I would love to have him come on in the last segment and give a little bit of a talk on some of these things. He saw this ahead of time. Hey, if you get the Trade What You See newsletter, he spelled this out. I mean, a blind man could see that banks were in trouble, for heaven's sakes. I mean, we said that when Goldman Sachs was trading up around 430 or something like that. We showed that the price here. I got it right here. I think it is. Yeah, here it is. This was back on February the 6th. That was 5 weeks ago. And this was the strongest of the bank stocks at the time. Some of these others, I mean, they've been going down forever. It's not a mystery that they're going. But right there's where we were. We took out this high by a little bit. The exact 786, folks. We hit it 3 days in a row. Couldn't get above it. And look, and now we're way down here right now. So the U.S. banks are holding up relatively well compared to the banks that we see in some of these other places like Credit Suisse. And boy, that's a big deal over there. I remember going to Credit Suisse. Now let's get back to what's really happening in the world here with bond volatility, because this is really, really important. This comes from our friend Juan Carlos Peretz, Mr. All-Star Charts himself, JC. Get it up here. And there it is right here. And there's what we are. That's where we were the other day. Now we're up here. And we're going there. Okay, now you remember earlier in this week when it's last week, I guess, the bank, it was last Friday when the bank had trouble. What you want to do is go back and see the last time we had a banking crisis. So we're going to take a trip back to Never Never Land, folks. We're going back to 2007 and 2008 and 2009. We're going to focus on 2008 because on September the 25th of 2008, Washington Mutual, the largest bank failure that we had in the United States. Lehman Brothers was second. You'll notice here, there's where we were. Now, this was a week before the bonds had a big drop, and then they went skyrocketing into the crash of 2009 that ended on March the 5th. But if you'll notice on March the 5th, they had already corrected, and they're on the way down. And from here, they went up for just about, how many years was that? 2025, that well, it went up quite a bit, 16 years. Anyway, so that's what you got to, they don't always react right away. You see, it takes a while for them to realize. At dinner last night, we had dinner with some friends, and I tried to suggest that, that maybe you have an extra $100 for food for the next couple of weeks, and they laughed at me, and so I turned it into a joke because I didn't want to get into an argument with someone. So and besides that, Sarah was kicking my shin so hard they started to bleed. So anyway, that's what we're watching here today. Okay, that's pretty much it. Now I got a couple others that are interesting here. I see I did the S&P. That's the important one, folks, because the Federal Reserve and all the banks, see BlackRock and all these companies, BlackRock, State Street, and Vanguard, they own 66% of the S&P 500, so they have a huge interest in keeping it above here. But eventually, it's going to happen that they can't, and that's when the pedal's going to hit the metal, and the S is going to hit the fan, and that is when we get below 38.39. Okay, let's get together here and have some fun. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we were chatting with Larry up there in Jackson Hole, Wyoming, and he was saying that he had bought some natural gas down here. He bought the ETF, but you'll notice here that we took out the lows here of last week, and we just did it by hair, and look how the market bounced above it. This tells you that, you know, just like here, you see how the low was taken out just by a little bit, and then boom? This could be, and this is an hourly chart, so it took several days. That tells you there was no stops here, so that's a good sign, correct? So all you have to do is put your stop below here now, because they filled all these stops right down here and the market rallied. So that's all I was looking at. That's just tape reading, folks. You get that if you read the book Reminiscences of a Stock Operator by Edwin Lefevre. He talks about learning how to read the tape, and you learn how to read the tape by looking at the price action. Richard Wyckoff was a master of it. The Wyckoff method is great, very similar to what Basil Chapman does with his wave analysis. You know, and it's the same thing. Now, I'm an ABCD person, so all I do is I watch to see how the market reacts around certain times, and that's all I'm doing. I'm not doing anything, you know, more exciting than that. It's not, you know, like John Chevney said, I don't, and I have a master's degree. Well, it doesn't make any difference. It's just that, you know, I can remember in college when I started learning to do this is back in the 60s, 62, 61. The professor there, he had a parrot, Oscar, and he used the Wall Street Journal every day. You know what for? The lining at the bottom of the cage. And I swear to God, that's what he used it for. Anyway, that's pretty much the way we look at things. Anyway, let's move on to another one. I want to get this S&P up. We've had several people ask me, that means a total of 1.5. You'll notice here as we get this up here, hold on, and we'll get this live. And there we go. Okay, there's where we are right now. And you'll see this is where I think we're going. This is 3,100. And what I think is happening, once you get below here, once you get below the lows here in December, there's the October lows, there's the December low. We're really close to it. Once we get that done, it's going to be like what happened here, only faster, because we got bank problems. And the bank problems are not going to go away right away. Be aware that the Dodd-Frank law that was passed under Obama's administration in 2014 allows them to go into your savings account and to take money out of it to run the government. And if you don't think that's the truth, go Google it and check it out yourself. It's that simple, okay? Now, if you own a commodity account or a stock account and you keep your money in T-bills, they're relatively safe because they have to sell the T-bills before they do that, and that's not part of the law. From what I've understood, I could be totally wrong, but that's what they're telling me. So yesterday I bought 5 $10 T-bills, and I've got them in my account just waiting to cash them someday in the future. It looks to me like March 21st, being the first day of spring and the fact that it's an equinox, is probably going to be a significant bottom in some of these things. And that's just, again, it's my opinion. Good news, good news. Tim Bost is back in business. He's writing his newsletter again. Hopefully we'll have him on very, very soon. He's had a rough time, folks. We almost lost him was in intensive care for 4 or 5 weeks. He had to go through rehabilitation, but I don't know exactly what he had, but it wasn't COVID, but it was, not a very, very fun thing to have. So those are some of the things that we're looking at here today. Regarding the U.S. dollar, we've been saying for a very, very long time that we thought that the euro was eventually going to get down to that 104 level. And hopefully we will get there here pretty soon. Believe it or not, are you kidding me? I didn't have a chart of the euro here. Well, I'm going to have to make one up. Let's take a look here at what I should do is I should focus on the bonds, folks, because the bonds are where the action is. It really is. And I want to get that up here to take a quick look at it, because that's where the real money is. I want to get the Treasury notes on here, because here's where the whole thing started. This is 2 weeks ago is when this start with the bank stuff really got moving, and the yield spread went nuts. Okay, now you can see the ABCD pattern here. This is a bear market, folks. You see the 382s all the way down, just like you're looking at Credit Suisse. Here was when they tried to tell us that, we got negative interest rates coming. Please give us your money. And we're going to charge you for it, but we cannot guarantee that you're going to get it back. Boy, that's really a good deal, isn't it? Didn't fall for that one. Anyway, that's the notes. But look at the Treasury bonds. I think I put it in here to show you where I think they could possibly go. No, I haven't done it, but you can do the math yourself here. Get it up here. It's raining like heck here right now, folks. Believe it or not. We got more rain this year than we've had in the last, I don't know. But there's our target right there. The ABCD on this takes us up to 139, and that's only a 61% retracement of the 382 from way back here last fall, August, okay? So that's what we're looking at. And that, believe me, folks, hey, we got half of it here. We already got up to 33. All we got to do is another 6 points, and we made the ABCD, and it's going to go higher than that if we get a flight to quality. And, that's certainly a possibility. So those are some of the things that we're paying attention to today. Whether they'll come true or not, I don't know. So that's pretty much it. Folks, I focus on charts, ABCD, and it's been working for me. And I, as a poet, and I don't mow it. I makes it rhyme every time. But by gosh, you have tried something and it doesn't work, try the ABCD. It's a heck of a deal. You can get everything you want to know. I'm going to give you a little commercial for the Floor Trader's Handbook, which is a 90-minute video that describes all the stuff that we do with the ABCD and how you monitor risk. And it also comes with a 90-page PDF file. So it's worth every penny of the $197. It's usually $297, but we give you a $100 discount here. And for one day only, if you want it for $150, if you email me today, you can get it for $150. So we'll see. A person asked me about my price objectives of the gold. We hit the 78% level today, up there at that 1942 level. Remember, we hit 1917 here Monday, and that was 618. We went through that like Grant took Richmond, and now we're up at the 786, so we're at a really interesting level. But difference this time is the fact that we had silver making that 382 retracement when gold was making a new high. Now, because I trade metals, and this is what I look for, I watch for divergence. So you've got, right now you make a big high up here, and you have this huge break. You see, this comes right down to the 61% retracement, and then with gold making new highs right up in here at the 786, you can't make a 382 in silver. So the odds are you sell the weakest, and of course silver is down in this area right now. It's dropped over 40 cents from that level. You're risking a 10 cents, and it's made 50 cents. Now you got your stop at break even or lock in a little profit, and that's what we try to do here at TFNN. But guess what, boys and girls? We are going to have to pay a few bills here in just a second. So if you have any questions, it's 877-927-6648. And if you do want that book, it's Larry@tradingtutor.com. Send it to me, and you'll get it for $150. Plus, I'll throw in one of my favorite books, The Essentials of Trading. It's not what you think, it's how you think. We'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, and that's my good friend, a trader in Philadelphia that's on vacation with his family in Marrakesh in Morocco, and the family's out riding camels today. And I told him I had been to Casablanca and then also to Marrakesh, which is about 300 miles south, and rode camels. This was back in '89, and boy, elephants are a lot of fun. Camels are not a lot of fun, folks, because you're way up there. You're higher than an elephant, and also they really go fast. I mean, you'd be surprised. And elephants go fast too, but they smell bad. That's the problem. It has nothing to do with the people in Morocco. It has to do with the camels. They're just not very well kept. Okay, someone asked a question, make it very quick here, about the prediction that I made way back in the only one I had right during that whole decade, which was this one here on the March 5th of 2009. We came down. We're going to get a low like this here. I don't know where it is. I've got to check with Shane Smolian and Norm Winsky and Tim Boss and Bill Meridian, see how close we can get to the date. But my back of the envelope math says maybe around March 21st. I know we're going to get, well, I don't know. I assume we're going to get, but we got to have a panic, folks. We got to have something like this. See, we're right here right now is where we are, and we're heading down there. So there's a long way to go to this. They don't correct these things. Do you remember on Monday when they turned the market and said, oh, it's not the end of the world, and the market gapped up, and I got on the video and I said, hey, this thing ain't over. It's just getting started. all it's doing is it's reacting to what the Fed does. They come in and buy during certain times when the market's thin, and they can move the market 60, 80, 150 handles if they want to, but it doesn't overcome what the larger cycle says, and that says we're heading to 3,200 in the S&P, at least, maybe more, I don't know. And the key word there is I don't know. Hey, listen, boys and girls, we'll see you tomorrow. Live every day in an attitude of gratitude, and do something nice for your neighbors.